Hi, Ivan. How are you?
I'm good. How are you doing, Patrick?
I'm good. Thanks for doing this. I'm eager to talk to you.
Yeah, this is fun. Excited to chat.
So for listeners, we're going to get into the venture capital ecosystems in Colombia and Mexico, where you invest. But before we do that, maybe just introduce yourself a little bit. Tell listeners about your background and what you do at NuMundo Ventures.
Sure. So I'm Ivan Montoya. I was born in Colombia, but I've lived in the U.S. most of my life. I live out in the Bay Area, really close to Stanford and Menlo Park and Palo Alto. So I've been living here for 30 years. So I've been here since 1995. Grew up in Texas, spent a little time in New York, but have been here for most of my professional career. At NuMundo Ventures, I invest in early stage startups in Spanish speaking LATAM. So for sure, Mexico, Colombia, but actually all of Spanish speaking LATAM. I think I've invested in Chile, Peru, Argentina, Bolivia. I'm one of the few, the proud, that have invested in Bolivia. So, and I mostly invest in pre-seed and seed. So these are super early stage. Oftentimes these are inception stage technology startups. Sometimes they're a year into it, and mostly in three sectors: fintech, prop tech, and supply chain. And yeah, that's the super high level overview. I'm sure we're going to go deep in a lot of
Yeah.
different tracks, but
So I'm curious though, did you come from an investment background or were you more of an entrepreneur, a business operator? What was your background before you started doing venture capital?
yeah, so I definitely wasn't an investor. So what I did was I'll take a little bit of a step back and kind of talk a little bit about how I ended up doing what I do today. So, like I mentioned, I was born in Colombia. My family came from very big families. So my mom had she was one of 11. My dad was the youngest of five. So we were always going back and forth to Colombia. We were I think maybe the second people in the family who had moved to the U.S. I had an aunt, or I have an aunt, Aunt Gladys, Tia Gladys, who lives in New Jersey, and so this was like early '70s, and so for the summers, Christmas, we're always going back. I used to joke with people. You get to the airport in Bogota, and it was like an assault of kisses. Be like 50 aunts, uncles, and cousins, Ivancito, and all this. And we did that every year until 1989. And we were there in August. And I don't know how many, if you've seen the show Narcos,
Yeah.
the Netflix show Narcos, but in the first season, pretty much a climactic moment was when they assassinate the presidential candidate. And we were there. We were there. We were like a mile away from where it happened. The next day, we happened to have our flight out of Bogota. It was crazy. I think it was probably the closest thing. When I was growing up, people would talk about where were you when Kennedy was shot. I think that's what people in Colombia feel like
Mm.
about this event. And I was there, and it was surreal. And so at that point, I had just finished my first year in college, and both of my parents are doctors. I was supposed to be a doctor, firstborn immigrant.
Mm.
I was damn well should have been a doctor. But I told my mom, hey, I'm going to be a doctor for the rest of my life. I'd love to learn something that maybe someday I could help Colombia. Right. So I do something a little bit different. So I studied development economics. But the situation in Colombia was super dangerous. I ended up not becoming a doctor, working in consulting at McKinsey, ended up doing a project in Mexico City. But even then, they were starting to kidnap people,
Mm.
foreign executives in Mexico City. So I figured, well, my window to do something in Latin America shut. So I end up coming to Stanford for business school. The internet's literally starting. I think
Yeah.
Netscape went public the month before I started business school. We'll go into more in depth, but basically over the next 25 years or so, I worked in technology companies. I worked at startups. I worked at bigger companies. I joke that I've seen the good, the bad, and the ugly. I've been a part of a company that got sold for $1 billion. I've been in a company that shut down, and everything in between. And so I worked in the space, like I was an operator at tech companies,
Yeah.
and then I did a trip to Colombia in 2013, and it was the first time in 24 years since
Okay.
1989 to then. And I remember thinking things were better, but not exactly the way maybe my
Yeah.
romantic memory of what it was like when I was younger. And then we went back in 2018, and my eyes were kind of opened. We went to Cartagena, Medellin, Bogota. I think the World Cup was happening, and this
Yeah.
player for Colombia, James Rodriguez, was on
Yeah.
fire, scoring goals left and right. And I don't know. I came back from that trip, and I'm like, I've been thinking about angel investing, but I wasn't very inspired to do it here in the Bay Area and be one of 1,000. After
Yeah.
that trip I was like, maybe I can do something here. Maybe I can be different. Maybe I can help. And so that's kind of, I started investing as an angel in a lot of companies that ultimately led to what I'm doing today.
Yeah, that's a great story. So, how have you found it then? I mean, what was the venture capital landscape like when you first started doing it? How's it evolved since you've started?
Yeah, so I would say there are a lot of similarities, at least over the last, let's say, 6 years. So I did my first angel investment in 2019, and pre-pandemic, right? Things were kind of starting to heat up in LATAM, and then the pandemic hit, and just like in the US, things went crazy. Like just capital started flowing. Ironically, I remember thinking, oh, this is the end. But that was actually the beginning. And there were a couple big things that happened in Latin America. Most importantly, SoftBank started investing in LATAM. And they wrote very, very big checks. And so they effectively played the role of kingmakers. So they invested in Rappi. That became a unicorn.
Yeah.
That was like a big, big opening salvo, but they invested in a lot of other places. And then that brought more capital. So you got the Tiger Globals, you got the other big players that more kind of in the hedge fund kind of crossover space, but it also brought traditional VCs. So just more money
Yeah.
flowed into the ecosystem for, I don't know, 2 to 3 years. And then similar to the US, interest rates are going up, inflation starts going up, and things shrink.
Yep.
And so the capital leaves as it did here. And so it's gone through several cycles since I've started.
And how do you find it now? I'm curious because you're right. I mean, they were throwing around $100 million checks in Latin America during the pandemic 2021,
Yeah.
2022, and then it really dried up, right? And has it started to come back in the conversations you're having trying to raise capital, or is it still a bear market for venture capital in Latin America?
I would say it's back to, it's almost like when people talk about e-commerce and you look at Shopify and,
Yeah.
all the different e-commerce plays. And during the pandemic, you had this rapid growth. But then after the pandemic, it sort of reverted back to the trajectory it was before, right?
Yeah.
So it kind of pulled forward demand for a couple of years. And then people go back to malls and you basically get back on the trajectory that you were before. And I would say that's the story of VC in LATAM, right? So kind of the early days, there were a couple funds in Brazil that started in the I think Monashees might be the official first big fund in LATAM. They were like
Yeah.
2005, 2006. Kazakh, you had folks who came out of Mercado Libre, maybe 2011, 2010-ish. So that was really the beginning of VC in LATAM, I would argue, is let's say the early 2010s,
Yeah.
both in South America as well as in Mexico. And they were kind of on this steady but slow progression. And then you had this huge spike, and then it's back, and it's more or less along
It's
the
back.
lines that it was before. So I would say that, is it a bear market? I don't know. I think it's a lot harder to raise for sure,
Yeah.
but probably similar to kind of what it felt like in 2019, right? So maybe there's more capital in the ecosystem, but it's hard. But I would argue in the US, historically, it was always hard to raise venture capital, and it stopped being, I shouldn't say stop being hard, but heading into the pandemic, it became way easier. Then the
Yep.
pandemic, it was like money was flowing everywhere. And then we're back to, with the exception of AI in the US, you're back to like it's hard to raise money.
Yeah. There's a real cost of capital now, right? You can
Yeah.
actually invest in treasuries and get
Yeah.
an okay return. So,
Yeah, for sure.
so
So
what are
I would
the,
say it's not, I don't think it'll ever be back the way it was in
yeah,
2022, but definitely people are investing and there's more optimism. But yeah, it was a hard snapback. Let's put it that way.
2 steps forward, 1 step back, I
Yeah.
guess.
Yeah.
So, what are the conversations like then when you go and talk to a Silicon Valley investor and you tell them, hey, I'm doing really, really early stage venture capital in Colombia and I've got a company from Bolivia? How do they react? I mean, what are their questions or doubts? They just kind of look at you like you're crazy. I mean, I tell people I travel to Colombia and sometimes people look at me like, oh my God, really? Like, you're going to go to Colombia? Isn't that dangerous? And here you are putting, a lot of money to work in early
Yeah.
stage startups.
I would say it's like a tale of two cities,
Hmm.
because on the one hand, you have examples that at least people who are in the know are aware of, and specifically Nubank. You've got
Yeah.
Nubank as a VC backed company. You have Mercado Libre that was also VC backed way back in the day. back in 1999. But NuBank is more recent. And the two lead investors for NuBank seed round were Sequoia Capital and Kazakh.
Yeah.
And NuBank today, I don't know what, I haven't looked at the stock market, but I think they're like 60 billion, somewhere in the
They're huge.
60 billion range. That company was started about 11 years ago.
Yep.
So Founders Fund is in there. So there are a lot of American VCs who had a great return on NuBank. And so on the one hand, there's the promise of something like a NuBank. On the other hand, there's some of the news that you see, and that scares everybody. So I think it depends. It's for sure. I would say during the pandemic, you started to see not just people like SoftBank entering the market, but you would see traditional VCs getting way more active in LATAM. And then when when interest rates go up, whether you're Excel or other, very successful VCs in the US that had done something in LATAM, they pull back because they got, they basically kind of went back to their knitting. Hey, let me focus on software with 80% gross margins. A lot of LATAM is fintech. There's kind of different things going on there. And so it just depends. There's some folks who are active and they look for these things, and other people, I would agree with you. They're like, whoa.
I'm curious, do you find like a difference between industries when you talk about it? Because I agree with you. All these fintechs, for whatever reason in LATAM, are really well known internationally. You have Stone and Mercado Libre and PagSeguro all listed in the US. And I think the venture capital too has been really popular to invest in fintech. So do you find it easier to pitch a fintech type venture capital investment compared to the prop tech or the other stuff you're doing that maybe isn't as heavily invested or well known amongst international investors?
Yeah, I mean, the reason fintech is so important in LATAM is because there's huge problems to fix, right? So whether it's access to credit, whether you're a business or a consumer, it's still massively constrained. I forget what the number is, but if you compare it to levels in the US or even other maybe not as developed economies, LATAM lags by a huge amount. There's payments. There's all sorts of problems with fintech. Problems to be solved. And the reason I think fintech of all the sectors has gotten the most attention from US-based investors is because if the startup is successful, they can show traction metrics that are undeniable, right? So I invested in a Mexican founder who, and we'll go, I'm sure, into stories a little more later, but it was basically car financing type of fintech. And he went from 0 to 25 million in run rate revenue in less than 3 years. You can't stop but look at that and say, what's going on there? Whereas maybe a traditional software company, they follow, hey, they get to 100,000, then they get to 200,000 in ARR. And they're like, well, if you got something at 200,000 ARR, even $1 million ARR, well, I can see a bunch of those in Palo Alto. But what is this company that does 25 million in run rate revenue? What do they do, right?
Yeah, sometimes like Bitso, for example, the biggest cryptocurrency exchange in Mexico, there was a stat like 2 years ago where out of nowhere, it felt like they were doing like 2 or 3% of all the US dollar remittances in Mexico, which is insane for a company that was founded less than 10 years ago.
Yeah. So I think both the market need is huge. There's probably more people, for better or for worse, at least in the Valley. I think this might be a little bit different in New York, in the New York ecosystem. But for, let's say, traditional venture capitalists here in the Bay Area, a lot of it is very socially driven too. Do they know somebody on the cap table? Do they know somebody who invested it? Because for many of them, it'd be like, hey, this would be our first investment in LATAM. Is there somebody who's invested in your round that I know? Either a US-based VC or somebody in Latin America. And so outside of fintech, they may or may not know anybody. But in fintech, just using the NuBank example, and I'm sure I'm going to miss people, you had Sequoia, you had Founders Fund, you had DST Global, you had Warren Buffett himself, right? You have all of these different people. And so, writ large in fintech, they probably know somebody who's invested in fintech. So it's easier.
So what's it like then trying to source entrepreneurs then, right? Because you mentioned your background's all Silicon Valley. So how do you then build out a network in Colombia and Mexico to find entrepreneurs and avoid, just hiring an American guy that went to Stanford that wants to go start a business? How do you find the real entrepreneurs that understand the market?
Yeah, I mean, I'll tell you, that was my biggest concern when I started investing as an angel was would I have access to anything? And especially because I'm based here, right? And so I thought, oh my God, I'm going to have to travel, or am I going to have to suffer adverse selection? Like the only people who I talked to is people everybody else said no to, right? But I would say two things changed everything. Well, one major thing changed everything, and that was the pandemic. The second thing was Zoom. So I would say, sorry, let me back up. The pandemic and Y Combinator made what I'm able to do now possible. Without those two things, wouldn't have happened.
How did Y Combinator affect specifically like the Latin American? I'm curious.
Yeah. So here's the two things. Number one, Zoom. Everybody's meeting on Zoom, so I could be in Bogota or I could be in Palo Alto. Didn't matter. Prior to that, it was all like it was here, very in-person driven. There would have been a ton of friction. I'd have to be traveling all the time. So that was a major shift. And then Y Combinator has been crucial. And why is that? Because some of the early people who raised big rounds were YC grads in LATAM. So Rappi is a YC company, for example. There are a bunch of other YC companies. Now Ports, I think, is a YC company. But a lot of folks who ended up doing really well in raising capital went to YC. And so all the Latin American founders basically want to get into YC. So then I show up, however I get the referral or make a connection, and they look at me and they're like, he lives in Menlo Park. He knows this person. He knows this person. He knows this person. And so, having a meeting with a Silicon Valley investor went way up, even as an angel during that period, right? And so I think those are the two big things, right? There was a period of time, maybe not so much now, but there was a period of time that every new company that was started, tech company in LATAM, basically was trying to get into YC. So they either established as a Delaware-based company or a Cayman sandwich, because those were the two company structures that YC would accept.
So how competitive then is your business? Is there competition for early stage deals, or is your challenge more internal? It's to go out, source good investments, find a business that's going to grow, or are there other VCs doing what you do and you're competing for deals?
Yeah. So I'll talk about kind of the ecosystem as a whole, and then I'll talk about me and what NuMundo. So I would say two things. Number one, there is a lack of capital at all stages. So there should be more venture capital in LATAM, or LATAM as an economy could support more VC investment, particularly in Spanish-speaking LATAM. I would make the case that Brazil is more developed. There's more local capital and LPs who funded players. So I don't know the specifics of Brazil, but if you go to Colombia, I think in Colombia, there may be one or two VC firms. That's it. Yeah. Right. And so at all stages, there's a gap. So I would argue in some ways, it's not competitive like it is here in the US, because here in the US, you might, whether you're at pre-seed, seed, and especially starting at Series A, you have like 100 different firms.
Yeah.
If the company is really interesting that are competing there you don't have that. Now, all that being said, I think most of the capital that has been raised by local funds tends to come in around Series A. Kind of pre-Series A, Series A. So there is definitely competition there. People want to have a certain percent ownership. And so you'll have some competition there. But on the two ends, early and growth, there's tremendous lack of capital. So I would argue where I invest, it's not that competitive. It's more collaborative, right? It's like, hey, trying to get more people to help fund and support this company. And then the second thing is our fund is a small fund. So we write smaller checks. So it's not like we're saying, hey, we need to own 20% of the company. And so the founder has to choose, they're going to take money from NuMundo or nobody else. So we're small checks. So we're, for the older people, we're like the hamburger helper or the salt on a meal. We can talk more about what I do and how we do it, but it's not that competitive at the pre-seed and seed.
So before we talk about specifically what you do, I want to ask you, how did the bigger funds then, because you mentioned there's not many local VC funds. So then how do the Sequoias that invest in your bank, how do they structure their LATAM operations? Are they with an office in Bogota or with an office in Mexico City, or do they just hire and make a partner that sits in Palo Alto and covers Colombia for them? How do they go about, researching and investing in the market?
Yeah, I don't want to speak on their behalf, but I'm going to give
Yeah.
generalities. I would say, in terms of the traditional Silicon Valley funds, whether it's Sequoia or whomever, Benchmark or Excel, they almost none of them have local offices. In fact, I would be fair to say none of them.
Yeah.
The famous thing about Nubank was David Velez, the founder of Nubank, was working with them during business school at Stanford, and his job was to see if they could open up an office in Brazil, and they decided it wasn't time for it.
Yeah.
And he ends up starting a company, and that's how they got involved, right? So they may have folks on their team who one of the things that they look at is LATAM. And again, I'm not in the middle of all that, so I don't know, maybe some have a full-time person, but I would say in general, A16Z has a partner that's very focused on LATAM, but for the most part, they definitely don't, most of them don't have offices. Now, you do have some funds that are very LATAM focused. Valor Capital is one, and they'll have offices in New York and Brazil, so there are funds that have offices here in the US and in Latin America, but I would say they're the exception rather than the rule. And there are people who are like LATAM is core to their thesis. A traditional large VC firm here in the US that's traditional tech like a Sequoia, they don't have offices there. So they have a network, and those people are very good at what they do, and people refer them stuff. And then they have inbound, right? So you have founders like, hey, it's aspirational capital. Yeah, I'd love to get, so, half of my, I don't say half of mine. I meet a lot of founders because this is like coming to Mecca, right? They come here to meet with investors, both because they want to see if maybe they get an investment from a firm in the Valley, but also because at some point they get to Series A, and for sure if they get to Series B, there's a lack of capital.
Yeah.
LATAM, so they have to come to the US. And this is one of their stops.
So better to start early, so you already start building the connections.
At least on their radar.
Yeah. At least you've already met with someone, and if 2 years down the road, you know who to talk to. So tell me a bit more about what you're doing at NuMundo. When we talked before, you mentioned how hands-on your approach is. You mentioned your background's an operator more than an investor. And so tell me about, how you work with an entrepreneur before you make the investment when you're doing due diligence still.
Yeah. So one of my beliefs is, that founders in Latin America in general, and even despite YC publishing a ton of content, whatever, very few of them know or have a big community to be connected to who can give them advice on whether it's for fundraising or some of the kind of nuts and bolts of starting a company. Here in the Valley, odds are, if you're an entrepreneur, many other entrepreneurs. And even if you don't, somebody who knows somebody. You probably know lawyers who work with startups. You probably have access to investors who work with startups, right? That is less the case in Latin America. So part of my thesis is that there's some amazing entrepreneurs and amazing talent.
Yeah.
And just being able to have access to somebody to ask some of these questions can move the needle in a lot of cases, right? And so what I do is this. So I meet with a lot of founders, right? So at some level, VC is VC. You need to meet with a lot of companies. You have a funnel, it narrows down, and then you find a company and a founder that fit within the way you invest and what you're looking for, and then you start to go deeper. And what typically happens is, and this is true in the US as well, but what typically happens in Latin America is, you meet once or twice, you're in a fundraising cycle, you're trying to close, maybe they do due diligence, but that's it. Somebody writes a check, and depending on how involved or not involved, usually not that involved, right? Maybe, if you're a really important company, maybe you meet once a month, once a quarter, maybe, right? But this just, it's kind of like, here's your check, good luck, right? What I tend to do is I will oftentimes meet founders that I hear really good things about, then I meet them, whatever, oftentimes outside of a fundraising cycle. In fact, I almost prefer it. And the reason is there's no time constraint on them, or there's no deadline that says, hey, you got to make a decision in a week. And on my end, there's no deadline, right? And so I will oftentimes tell founders, hey, you need to raise capital in a week. I'm not your person. I definitely don't want to slow you down. You should go meet with these other folks. And then we just start going super deep. I mean, I will oftentimes, we'll work with a founder and, even often if I start going really deep with the founder, odds are I'm going to end up investing, but not all the time. But we will oftentimes work through their pitch deck. And by the time we're done, they have a new pitch deck that they can use to raise capital, right? But the way I typically work is this long due diligence process of getting to know the founder. I think it's super important for founders to have people on the cap table they can trust. Trust is not a one meeting thing. And then we just work on everything. I mean, the financial model, I really, really focus on what's the problem they're solving. And is this a painkiller or is this a vitamin? Like, is this a must-have? Right? And I would argue we'll go if we want, we can go much deeper. But I spend a lot of time on that. And then if I do invest, I will oftentimes bring other people on my network who are experts in go-to-market and the things that are really critical at the earliest stages. And then obviously, a big part is helping them raise more capital. Right? So.
I want to ask you a little more before we talk about the problem and the vitamin painkiller you mentioned. I want to ask you a little more about the founders and just, I guess, compare and contrast the founders you meet in Silicon Valley to the ones that you're doing extended due diligence with in Latin America. Where do you find maybe the Latin American entrepreneurs are a little more green, where you need to coach them up a bit and teach them, and then maybe what advantages have you seen that they might have in general over a career Silicon Valley entrepreneur or someone that's coming out of, top schools and going through the more traditional venture capital path?
Yeah. So another way I would frame Latin America in many ways, to me, it feels like VC from the 1970s in the US. So if you think of Steve Jobs, you think of Bill Gates, you think of some of these early-ish companies that were unbelievably impactful and successful in the US. I mean, it wasn't cool to be a founder back then. These were people who were doing it because they had to do it.
Yeah.
Like they were compelled to do it. It wasn't because, hey, it's a cool thing to put on my resume. Let me go. It was hard as hell. Where are you going to get money? Whatever, right? And so I would say that's one of the big advantages in my mind, especially the founders I love to back, is it's pure. Yeah. They have a burning desire to go do this. This is not because they know 50 other people who've been successful doing this. There was a little bit of that, I think, during the pandemic, but especially today, you get people who are doing it because they're obsessed with this. And I think that's no different. I think founders in Latin America and the great ones in the US share that. Right. I think in LATAM, it's a little more pure because they really don't have a precedent, Go ahead.
No, I've noticed that too. I was just going to say, because there was a little bit of that, Silicon Valley's got an incredible global brand. And you do see people that maybe they decide they want to be an entrepreneur because they see all the, Nubank and they see all these guys. But my experience, the best entrepreneurs I've met in Latin America have been, they have a burning desire problem they want to solve, or they kind of started a business and it started to go well and they just kept scaling their business. And then all of a sudden they have, a venture-backed company. But very rarely do I see the ones that go, I want to do a venture-backed company. What do I start? I go through some, what's the word I want? The programs they put the people through.
Accelerator.
That's the word I wanted. Yeah, they go through an accelerator. I feel like I haven't seen as many successful accelerators in Latin America. It's more...
So it's not to say that doesn't happen, but I would say in general, the folks that I work with, that's what I'm looking for, right? And you see a lot of that and the resiliency. Like I had a very fun, interesting experience in Colombia. I was there in August for this thing called Colombia Tech Week. And it's, this week where they do all this stuff with the startups and they bring investors. And I remember the sun comes up super early in Bogota. I don't know what the deal is with the time zone or whatever, but I think at 5:30, the sun comes up. So by 6 a.m., I'm like, well, I'll go for a jog. So I go for a jog. And as I'm running, I notice the buses and everything and people walking on foot, they're packed. I'm like, these people are going to work this early, right? And I meet with the founder and I said, yeah, I noticed this. Like, and at night, yeah, they're still working. It's like 8 o'clock. I'm in a taxi and it's packed. I asked the Uber driver, why is it so busy? He's like, people are just leaving work now. And in Colombia is maybe a one-off in LATAM, but what they told me, this founder told me, it's like, look, in Colombia, with everything they've gone through, nothing's a given.
Yeah.
Everybody, like whether you're wealthy, middle class, or you didn't have much money, there's this work ethic and this belief that you got to do it on your own, right? And so you have some of these cultures where, I hear this about China, the work ethic in China, right? So there are these cultures that breed resiliency, where they've had to deal with stuff,
It's
that
much more.
people in the US are not used to.
It's much more adversarial for business owners, right? It's if you
Yeah,
can make it in Brazil or Colombia as a startup founder, you can make it in California where there's a well-charted path with all these helpers along the
exactly.
way for you.
So yeah, like when you hear the founders of Nubank talk about it, it's like, yeah, when we started, there was a banking crisis in Brazil, and then there was inflation, and then there was this, and there was that, like, and that was normal, right? So I think that's so. I would say on the founder side, there's a little more purity, and oftentimes a ton of resiliency, and I'm shocked how many repeat founders I backed. I didn't even know it. It was because, hey, I started this thing in high school and I sold the company. I'm like, really? Or whatever. It's their second or third company and they're 28, right? So there's this entrepreneurial kind of vibe that you see there. What I would say the things that are maybe challenges from a founder perspective or different is one, for sure, just knowing, kind of like you said, there's no charted path. Just the
Yeah.
knowledge of like, okay, you're at this stage. Here's what you got to think about. Here's the next step. Here's the next step. Here's the next step. So that's very unknown or opaque. I would say how to communicate and position, especially when you're raising capital for growing their business. It's all good, right? They know their
Mhm.
audience. They know how to communicate. But a classic thing, at least in Colombia, that I think is different country by country. But I remember my dad, I would ask him a question and he gave you a full answer. Uh, Whether it was good or bad, like, if there are pimples, he's showing you a picture with pimples. He's not putting anything to hide the blemish.
Yeah.
You come to the US and you see a pitch and you're thinking like, oh my God, these people just solved the most important problem in the world. This is going to be huge. And if you ask them a tough question, they'll say, you know what, Patrick, that's a great question. And then all of a sudden that turns around into some positive. In Latin
Yeah.
America, they'll tell you, yeah, that sucks. That's really hard. And you're like, oh,
Yeah.
so I think that's both good, but probably hurts them in how they package. Let's call it packaging a startup. And then the third one that's probably more substantive is, and this is changing little by little, but I hate to use this word, but I'm going to use it. Some investors refer to ambition level, right? So when somebody starts a company on University Avenue or in Mountain View or up in the city here, almost from the very beginning, they're thinking this is a global company I'm building. I'm solving a global problem, right? So if you're thinking of OpenAI or any of the people that are very big in the news, it's not like they say, hey, we're going to build an LLM for San Francisco or
Yeah.
an LLM for California. It's like, no, we're building an LLM for the world. Oftentimes in Latin America, you're like, well, I'm going to build a startup that's going to focus on Colombia, or I'm going to build a startup that's going to focus on Argentina, right? And there are some sectors, fintech being one, where that might be okay because if you build a big bank, it's still you don't have to be in a ton of countries. But getting more and more people to build for the entire region from the beginning and or building global companies that are solving global problems. They might start,
Yeah.
in LATAM, but it's something that can scale. That's something that maybe it's still kind of early days in
Yeah. Is
LATAM.
that a problem? No, because like I feel like not all startups have to be completely global to be successful, especially from an investor perspective, right? A 10x return is a 10x return, whether they're global or whether they're specific to one country. And I guess another point is, Latin America has enough scale for even if they just dominate Spanish speaking Latin America. I mean, if you break out South America and combine the GDP, it's the third largest GDP in the world after the US and China. So, I mean, I don't think, anybody gets criticism if they're just going to focus on the US market or just focus on the
Yeah.
Chinese market. But for whatever reason, I feel like the LATAM startups get criticized because, oh, we're going to be a Spanish speaking LATAM startup, even though that's a huge market. And if you can, take significant market share, you're going to do pretty well.
Yeah, it's fair enough. I would. I mean, obviously, I believe that, but I'm kind of maybe putting it in a bigger
Yeah.
context. So let's do two example countries. Let's talk about India and let's talk about Israel.
Yeah.
Okay. So India, they have IPOs, they have a capital market, right? There are companies that build for India. And every once in a while, there's an Indian company that is global,
Yeah.
right? But to your point, there is a well-trodden path or an emerging path of building stuff for India in India that is very
Mm-hmm.
successful. And that's, as an example, as a comparison, Excel has Excel India, right? So there are firms here in the US that have branches, if you will, or their own another entity in India because for the very reason that you said. It's a big market.
Yeah.
There's great talent and so on. You look at Israel and the local market's too small. So for a venture scale return, and so they're almost always global.
Yeah, right. Why bother looking at the domestic market, right? You start out ignoring it almost.
And so I think you're right. Brazil has proven this out. You don't necessarily, Brazil is a huge economy, so you have plenty of
Yeah.
companies that just kind of build for that ecosystem. But if you're Colombia, if you're fintech, you're a couple things maybe, but if you're a SaaS company, can you get a quote unquote venture scale return? Oops, looks like I'm frozen. Can you hear
Sorry.
me?
Yeah, I still hear you fine. So keep
Oh,
going.
yeah.
It'll come back.
Yeah. So for some of the sectors, possibly AI, SaaS, if you build for just Colombia, it may not be big enough, right? And so you may need to make sure you can be successful in Mexico, right? So at least there's a regional play. And then there's other sectors where, I don't know, if you're building AI for a certain use case, there might be some very specific use cases, maybe healthcare that's
Sure.
specific to, a local market. But some of those are going to be global in nature, right? And so
Right.
I just think I agree with you. I don't think you necessarily have to do that, but I think it just depends on the investor, right? If you're coming in and you own 20% of the company and they over time got to 100 million in revenue, you don't need to be, it's good. But if you're investing a small check super early and for your math to work, it needs to get to 100 million in revenue or 200 million in
Right.
revenue.
Right.
You got to believe, is there a business here that can be that big, right? So but it's no different in the US. It's all the same.
Yeah.
Is your market big enough? And in some cases, yeah, the local market is plenty big.
So let's dig in then on the problems you mentioned earlier, the vitamin versus painkiller you mentioned. So then you focus fintech, prop tech, why specifically those markets? Are those markets that you think are big enough where you can find sufficient return and scale in the startups, or is that just where you're finding the best entrepreneurs? What's behind the industry theses?
Yeah. So in the case, let's just take fintech as an
Sure.
example. Massive market. So that's an example where you do not have to be multi-country to build $1 billion, $2 billion company, right? So that's number one. So it's huge, huge, huge problems. Like at every level, there's friction, particularly credit. So whether you're doing consumer lending, B2B lending, there is the traditionally in Latin America. So this is a big difference between US and LATAM. And this is why sometimes people, maybe they're like, I live here and sometimes I'll be like, why is that a problem? Right. And then you're like, oh, yeah. So historically in financial services, most of these countries have oligopolies. So there's a small number of players. So I think like apparently, if I've got my numbers right, in Brazil, maybe there are 5 legacy banks that owned 80% of the market before Nubank went in, right? That story is true, and in some cases even more extreme in other countries, in Mexico, Colombia, whatever. And so what happens over time? Those folks tend to focus on the top of the pyramid. Let's say if it's a consumer kind of a financial institution, if it's B2B, they'll focus on the biggest companies, right? Because they can make money. They're not competing. Prices are very high. They make a lot of money. So they're super profitable. What ends up but they end up being like a utility, like a cable company, right? So the service is meh because they don't need to be, that. And again, I'm being overly dramatic. But if you're in the middle part of that pyramid, and if you're at the bottom, you got very little access, no service whatsoever. And even at the upper end, because it's only 4 or 5 players typically, there's room for
Mm.
entrance there, right?
Yeah.
To come and disrupt and whatever. And so there's just tons of opportunity in fintech still, even 10 years after Nubank's founding. Yeah,
Yeah.
there's still,
You mentioned credit too. When you have these, oligopolies or, a few big players, they don't have to take risk, right? They don't really have to go out the credit curve, right? So if they're not sure about your small business for a loan, they don't
yeah.
care, right? They can just sit the
I
money
think
in
somebody
treasuries
told me
and
this. The number of banking institutions in the US is like 2,000. Or I could be wrong, maybe thousands. It's in the thousands
yeah,
from community banks to whatever. And you go to a typical Latin American country, there might be 10
yeah. In
that
Brazil,
dominate.
I tried to buy a bank when I was working for a startup in Brazil, and they basically just wouldn't let you in the club. They came back and we networked it, and the central bank came back and said, unless you can show us $100 million net worth outside of this company for the two founders who were both like 28 years old, you're not getting a banking license. Get out of here. And so, it's a club and they don't let you in. And if you're not worth the credit risk, you're just underserved. I think, it's basic stuff too. Like Americans might be surprised. I know the statistic for Brazil, it's like 10% of houses are financed with a mortgage.
Yeah.
Like, yeah, it's basic stuff that, Americans and developed market citizens would take for granted, but,
Yeah.
you can barely get a loan for a house.
So, sometimes I feel, especially living here, that I sort of like, in some cases, you feel like you're living in the future, and then you go back into the past, and you're like, oh my God, most people don't take out mortgages. Why is that? Part of it is cultural. Maybe there's a relationship with debt that people don't
Yeah.
like. But if you go back to the 50s in the US, that's the way people felt about credit cards. In the 60s and 70s, it was like, why would I have a credit card, right? And then over time, the market develops, and you're, in a lot of cases, it could be cultural, but also, like you said, supply constrained. Why would I lend to anybody other than the top percentage of the population? Uh, why do I go down the risk curve at all, right? So they could, even if they wanted to, it would be hard to find a good mortgage, as an example. So anyway, so there's just tons of opportunities. There's tons of real problems. There's tons of painkillers
Yeah.
to be built in these industries.
Interesting. Yeah. And so what about prop tech and supply chains then? Because, like we mentioned earlier, fintech gets a lot of attention, the lion's share of attention when it comes to LATAM startups. But what about the prop tech and the supply chain sectors? What's the thesis
So
there?
so the same thing, and some of these things really overlap. So you're seeing
Yeah,
prop techs who do fintech, right?
sure.
But if you look at prop tech, again, take for granted. In the US, there's an MLS. And so for people who don't know what it is, MLS stands for the Multiple Listing Service. And it's essentially something that I think started like 100 years ago or so, where real estate agents would share the inventory of houses that were for sale. And so people submitted. It's an industry group, I think the realtors associations in the US. And because that data exists, it's easier for a real estate agent say, hey, they've got a client. Let me show you all the houses. Oh, where do you want to live? What's your neighborhood? What's your price range? They go in up, look it up. Well, that MLS became the basis for Zillow, for
Yeah,
all of these online real estate things that we take for granted in the US. That infrastructure is being built, but doesn't really exist still in many
yep,
of these markets. And so buying just things you take for granted, buying
yeah,
and selling a house, going and finding an apartment, knowing what the prices are. There's so much friction in that today. There's friction in getting financing for it. Then there's friction on building the houses. There's a tremendous, housing gap in Latin America. And if you go out and you see the less developed, I mean, the housing stock has a lot, needs to be improved tremendously. And if the economies develop, you look at a case like China where their economies grew, GDP per capita grew. You have people living in the farms, right, in rural, having to move into cities. Where are they going to move to in Latin America, right? So
hmm
there's this massive housing gap. So if you think about whether it's financing, buying and selling a house, financing them, building them, right, there's tons of friction and things that we take for granted here that don't exist there. So I'll
yeah.
pause there.
No, no, it reminds me of a Peruvian economist, Hernando de Soto, and he wrote a book called The Mystery of Capital. And the crux of his argument was that the biggest difference between, a LATAM country, because from Peru, and successful capitalist countries was clear-cut property rights. So his argument was, you go into the favelas and, they own the house, they have a business, but they can't access credit because there's no proof of it, it's not registered. And I look at, houses in Brazil, and there's so many listings. Now they do have like Viva Real now, where they have like an MLS, but there's so many listings. When you read the listing, it'll say not available for financing, not registered, contract of buy and sale. So it's just a contract you have with the last guy, and you don't really know if you own it. And there's been horror stories of 5 people owning the same house. And it feels to me there's a $1 million or a unicorn startup there if they can just register property rights.
For sure. And for what it's worth, Brazil is probably the most developed part of LATAM in terms of real estate. And there's some amazing companies, a company called Quinto Andar,
Yep.
And several others. But this is just an example, right? Like that infrastructure and making that process better is big. And then you take something like construction. Construction is one of the biggest industries in LATAM, massive. Yep. And there's a lot to do. So you look at, notwithstanding all the political stuff going on with the Trump presidency and trade and tariffs, it's unambiguous that you take a country like Mexico, there is just tons of need to, moving supply chains from Asia closer to the U.S. That's going to happen. It's what they call nearshoring. It's happening, right? It may go faster, it may go slower, depending on the policies of the current administration, but it's happening.
Yep.
And you got to build roads, you got to build factories, you got to build power plants, you got to build houses for people to live in. You got to do all of this stuff, right? And so construction tech and construction fintech, right? How do you provide financing for the people building these factories? How can they use better technology? So instead of just using a WhatsApp, and if you're lucky, a spreadsheet to manage the project, they're using technology to build these things. So that's kind of the prop tech and construction tech thesis.
So I want to be respectful for your time, so I'm going to wind it down, but I can't let you get out of here without asking you about the LATAM Early Stage 100 indexes that you have on the NuMundo Venture website. It's really cool. You list 100 early stage startups in Mexico and 100 in Colombia, and they're from different industries. It looks like it's a pretty good sample of the ecosystem. So you just tell me, how did you do that? What was the work behind it? What's the criteria?
Yeah. So I'll tell you the story, and then I want to share with you examples of 2 of the companies.
Yeah.
Back in, 2008, 2009, somewhere around that time frame, in the US, there's still this website called TechCrunch. And when they were in their early kind of days, they used to host an event called the TechCrunch 50. I think the number changed over time. Maybe it was 10 and became 50 and whatever it ended up being. But the basic idea is they would identify 50 startups, have them come to this kind of convention center type setting in San Francisco, and then they would pitch, and you'd have like a Shark Tank like thing, and then they would pick a winner, right? And that was always a big, big event in the ecosystem here. And so, I've been involved with startups for many, many years now in Latin America. I'm like, I wonder if we could do a TechCrunch 50, but for LATAM. And so there were 2 things going on last year. There was a Colombia Tech Week and Mexico Tech Week. So I went to the founders of both and pitched this idea. I said, we could do what they did at the TechCrunch 50. Let's do it, right? And so that's what we did. So we had people apply. There was a committee. We picked the top 100, and we published it and then hosted events during the Tech Week. And the founders could put up on LinkedIn, hey, we were selected. And the goal was just to raise visibility of these startups. Selfishly, and I would say this on behalf of the ecosystem, I wanted to open the door again to U.S. investors want to come in, because some VC says to an associate, hey, what's going on in LATAM? Right. So I wanted to make their job easier. Hey, let's take a look at some of these companies, right? But also within the ecosystem itself, raise visibility, and even for employees, right? That they can look, oh, hey, I'm on this list, right?
Yep.
That's a little seal of approval. And there's some incredible things. So I just want to share two stories of companies I backed, just so maybe we can wrap up on this. And
Yeah.
you know, we're like, oh, this is all great theoretical, but what's an actual company, right?
Yeah.
So I invested 3 years ago in a 20-year-old founder who basically was starting a car financing company. And we talked about the differences between the U.S. and LATAM. Same thing. If you worked for Uber or Didi, good luck trying to get a car, trying to get financing to buy a new car. 90% of these drivers don't own their own car. They're borrowing it, they're renting it from other people, borrowing it from a relative. And if you went to a bank, you don't fit the model. You don't get paid consistently every 2 weeks. You're probably not in a credit bureau. If you are, you probably miss some random payment the way the credit bureaus work in the US. So they weren't getting lent to. And if somehow you made it through, it would take a long, long time. And so his idea was with the data that's on the platforms themselves about their income, their ratings, how often do they drive, that they could build a credit model that would allow them to target the top drivers and give them access to a new car. So he launches essentially what is almost like a rent to own model for these cars. And I remember meeting with him. He was 20 years old, hadn't been to college. But like in the first 5 minutes, I'm like, there's something different about this founder. The clarity with which he spoke, just everything about it. We worked for 3 months. And at the end, I'm like, I think I found the Mexican Bill Gates. This guy is incredible. I write a small angel check later on when I launched the fund. I invested through the fund. And sure enough, I remember doing the math with him. I said, Maidon is his name. I said, let's do the math. How do you get to 100 million in revenue? And it's roughly every 100 cars is about $1 million in subscription revenue.
Okay.
And they charge a couple, $600, $700 a month. And so anyway, the math works out to roughly 100 cars. So 100 cars would be $1 million, 1,000 cars would be 10 million, 10,000 cars would be 100 million. And I asked him, well, how many drivers are there for Uber and Didi? At the time, the estimate was about 200,000. So to get to 100 million just in Mexico, he needed to get to 10,000. Right. And today he has roughly 2,500 cars or 2,500 drivers who they've as customers, and they're roughly at 25 million. And it hasn't even been 3 years since that investment. And so you're solving a fundamental problem. There's no options. It's a must have, right? Yep. You're changing the economic trajectory of these drivers, right? And you're introducing competition, right? And so that's an example of
a very reliable financial model too, right? Because if they're plugging into the 99 taxis, you can see what he earns, right? You can see how much the guy works. You can tell if he's working 3 hours a day or 13, right?
So that's been amazing.
What's the name of the company? Sorry,
called One Car Now.
One Car Now,
or OCN. And then the other one that I just used that isn't part of the early stage 100. But I just feel like I have to share it just so you guys get it, so your audience gets a sense of what's available, right? And this is a company called Cachea. So it's a company in Venezuela. I've invested so far in 2 companies. One is called Yummy or Yumi, which is almost like the DoorDash of Venezuela, but it's more like the Uber because they do ride hailing as well as delivery. So it's like Uber and Uber Eats, but in Venezuela. And they're doing great. That founder is amazing. Vicente, YC founder, incredible. But because I had invested in Yummy maybe 3 or 4 years ago, I met another founder starting a fintech in Venezuela. So in Venezuela, if you go back 5, 6 years ago, there were 10 million credit card accounts in Venezuela. Their economy starts to suffer. They have crazy inflation. They have caps on the interest rates that credit cards could charge. So at some point, the inflation rate was above that cap. So essentially, you had 10 million credit card accounts with a zero limit, or maybe there was a nominal. Maybe you had a $100 limit on your credit card, and that was it. So consumer credit disappeared in Venezuela. And this is not just for the unbanked. This is like for lawyers, doctors, whatever. They could not have a credit limit essentially on their credit card. So he thought, you know what? What if we launch a buy now, pay later service in Venezuela? So you're not really extending, you're just extending payments. There are all these other things behind the scenes, dollarized, the economy mostly dollarized now. So there are all these things. Third-time founder. He launches that company 2 years ago. Cannot raise capital. Yeah, if you think it's hard to raise capital in other countries, it's
No, forget it.
impossible in Venezuela. He raises I don't want to share too much non-public information, but like single-digit millions. And in December, I think they processed 2.5% of GDP. This
Wow.
company has upwards, let's call it close to 100 million in run rate revenue. They've been cash flow positive for over a year. And we're not talking small cash flow, like very, very profitable company solving a fundamental problem. They're the most downloaded app in Venezuela for the last 2 years, more than WhatsApp, Instagram, TikTok, Facebook. They're a verb there, right? If you go there and it's gamified.
What's it called?
Cachea.
Cachea, that's right. Sorry.
Yeah, yeah.
Cachea.
Cashea. So you can go look it up. It's super cool. They've got a gamified thing where people he turned their credit score into something people like, it's like a badge. Like, hey, I'm trying to improve my Cachea score or whatever. Amazing founder, amazing story. I could go on and on about
and they're onshore in Venezuela. So he has his office, his team is in Venezuela.
I mean, a lot of the Venezuelan startups will have, some folks there, some folks in other places, right? But yeah, and that's solving a real problem, right? That's giving even small credits, right? They launched a product. There's an original one, which is kind of traditional, buy now, pay later, like a firm. You pay every 2 weeks.
How did you get comfortable with Venezuela, though? Because I talk to people all the time, and I ask them, are we going to get to invest in Venezuela? Because everyone knows how rich it was and the crisis, and everyone knows the headlines. And I don't talk to many people that have the courage to write a check to an onshore Venezuelan company. So how did you get comfortable with that?
So for sure, I would never have written a second check if I hadn't written the first check. So because I was familiar with what Vicente was doing at Yummy, I got to understand what's happening at the ground level in the economy, the dollarization, right? And then second, my process is super deliberate. I worked with this founder for 5 months before I invested. And then at the end of the day, look, I don't want to beat around the bush. It's super risky. No doubt. Yeah. Right. But that's why I'm a VC fund, right? I have a portfolio of investments, right? So for me, I could invest in a company here in the Valley and it could go bust in a year.
Yeah. Right. You're by definition, you're risk capital. Yeah. That's what you do.
So I talked to several of my LPs and they're like, hey, we trust you. If you think this is an outlier, go for it, right? But if you do 10 investments in Venezuela, then we want our money back. So, as a part of a portfolio, hey, this is the outlier of all outliers, both in terms of the product, this problem they're solving, the founder. It's a third-time founder. Pedro is unbelievable. The team is incredible, and we'll see what happens. I pray for them. I pray for Venezuela, but it's unbelievable, right? And
it's so interesting. You hit me with that right at the end. I could talk to you for another hour and ask you 50 questions about investing in a venture capital investment in Venezuela, but we'll have to follow up and dig in again and do this again soon. But before we wrap up, tell listeners, where can they find you, follow your work, if they want to learn more about NuMundo Ventures, or if they want to refer a founder they know, where should I send them?
So first, you can go to the website, NuMundoVentures.com. Second, you can go to LinkedIn, look me up, Ivan Montoya. I'm very active on LinkedIn. I met Myron through LinkedIn. So I look at everything. Sometimes I can't respond to everything, but I definitely look at founder pitches. And those I'd say are the two best places. I'm pretty active on LinkedIn, so you'll see a lot of content from me as well.
And I'll link those both in the show notes for anyone listening so they can find it easily. Thanks so much for doing this, Ivan.
Thank you, Patrick. This was awesome.
It was a pleasure.